talked a lot about this, and then I tried to bring on the class today. I'm sorry I'm a little bit late. So we're talking about understanding intermarket correlation. We've actually looked at about 30, how many charts? We've looked at about 28 charts today. So on that, we talked about risk on sentiment and how to understand it. We've looked at the VIX needs to be low, which we've looked at the stock need to rally, right? So the VIX needs to low. I'm just recapping for you that are just joining in, and then I'm going to recap quickly. The VIX needs to be low. And that shows you that investors are ready, they are more than happy to take on risk, right? So the VIX is dragging low, and if the VIX is breaking up back higher, then you know that something is likely going to be changing. So we look at the VIX. The VIX is showing us that low, right? We have the high over here, we break down the low, right? That's an indication of the trend because we make a new low. So obviously, if the price even comes back up and then we continue down, we know that the VIX is the number one key thing. It needs to be in the low to prepare investors that we are more than happy to take on risk. The stock market now, right? The stock market literally needs to be rallying, okay? So when you look at this, over the last period, the price has been going up higher, right? That's telling you that we are in a risk on mode and everybody is more than happy to buy. So what is key for us is to be noting how the support will be behaving. If they are coming back in at the support to continue to push up the price back higher, which I believe they will likely do that, right? Because we managed to breach this structure, trade well above it, right? And then come back almost into it and then find the support over here. So all those support becomes very key in a risk-on environment. When a support of one particular chart starts to breach, then you start to understand that, okay, that might happen in S&P, right? So we're using this to correlate everything that's happening in the market in one go, right? So we looked at the S&P as well, that as if a resistance. So the next area that will be key will be to look for what is going to happen at the support. So when they come back in and they support to push price on, you know that we are in a risk-on environment. If they start to break one support down, then you want to look at other charts as well. Is the support going to be broken? So we look at the UK 100, that hits that level. Now coming back to the support, we might start to take on that risk-on environment back on. Right? So price coming back to the support before we hit it, we are finding a doji, the same thing on DAX. Look at that area of support where price is likely going to come back to. One key level is here as well. So if we, obviously you might not be able to trade all this, but they are key market indicators. These are not just technical indicators. These are key market indicators. What are the buyers actually doing in the market? What are the sellers actually doing in the market? Are they happy to assume risk by buying more of the stock? Are they happy to assume risk by buying at the support? So you want to understand where those supports are because that's where they're going to be making a decision. So this one is late to give us that sell-off, and then if the market is going to sell off this coming week, the Euro stocks will be one of the good ones to actually look at for that sell-off because it's the only one out of the rest of them that has not really assumed the sell-off, right? But if everyone starts to come back in to start to buy, then it's different. So this is attaining another key level of support as well. So we were able to look at all the markets from a snapshot, and these are 8 stock market. We've marked the area that we are looking at, and the moment they start to buy from those supports, and the one that's leading is actually the Australian 200. They start to buy at the support, right? And this has already started to lead, right? And if the buy continues because the Australian market will open first before any of the market. If the buy continues into the session, then that is already alerting you to the fact that the risk on mode has continued. Buyers are coming into the market. what kind of charts do I want to be looking at? You want to be looking at the stock market, this stock market, you want to be looking at them. You want to be looking at commodities. Are they buying the commodities as well? So the main idea is if every market is hitting support level, right? And once just start to rally, say for example, all of them is hitting support level and the oil begins to rally, right? That means if the rally begins in the oil, which means the buy begins in the oil, right? As the buy has begun in the Aussie 200, look at it. So everything is hitting support level. The oil has already hit its own support level and start to move up higher, right? That is alerting you to continuation of the risk on environment. Say, for example, and you look at the US oil, the same thing. You look at the UK oil, you hit that support, it's rising, right? So you're looking at this as a leading indicator. The copper is hitting support, and if it continues to rise, you can see that most of the markets are now hitting support, right? So whichever one continues its buy first to fall, right? We now alert you to the fact that today I need to be a buyer. I don't just need to be a buyer. I know the kind of pairs that I need to be looking at to be a buyer in. And those pairs are the pairs that we discuss over here. So we know all the factors. So we look at the stock rallying, we look at the commodities rallying, we look at the bond yield rallying, which we've seen. We haven't checked the bond price, but obviously you can do that. Then the risk on FX pairs are the next key thing that we need to look at. So what pairs are the risk on FX pairs? The Aussie, the New Zealand, the CAD, right? And then the Stave Avons, we need to look at them as well. So which means we have to be pairing the risky pairs, which are the Aussie with the yen, pairing the Aussie with the Swiss, pairing the Aussie with probably the dollar, but we're going to be considering the yen and the Swiss, also with the yen, New Zealand with the yen, CAD with the yen, right? Then we're going to be pairing New Zealand with the Swiss, also with the Swiss, and CAD with the Swiss as well. Sorry. New Zealand, Swiss, and CAD Swiss as well. Okay? So we need to be pairing all that together. So that's the reason why we come to CAD yen, right? So coming to CAD yen, we've seen that the price has hit the support, right? And as much as the price has hit the support, the price has shown us a promising fact that, okay, this is a low, okay? We form a little bit of the high over here before we see that continuation and make this new high, right? This new high is forming it at a level of, these are key levels now, okay? But when we see this sell off, right, instead of us to continue to sell off, we actually start to form a rounding bottom, which might not be clear on this 4-hour chart. But when you look at it on 30-minute charts, and a rounding bottom is a sign of exhaustion. So the price falls, right, and then we make a lower high, then we fall, and then we take time now to say that we trace back up again, and then we fall, and we taking time to giving a new low. You can see the price actually is doing its thing, a very key development like this. This rounding bottom, right? It's rounding off all the orders in the market, and it usually takes a little bit of time, right? And all those orders is turning back up into a buy mode, right? And then that buy mode, we are looking for it in the new week to potentially be able to come back above there and continue. And that leads to my question now that, okay, if the CAD yen start to rise, right? Which everything has shown us that the potential is there for it to rise. Because look at this, we form a low, we form a lower low, right? This lower low, we start to form some higher low, we form a new high, right? And then we come to form more higher low, which is somewhere here at the same time as well. So when you are seeing this sign, when you're seeing this sign of a higher low, you expect the price to rise back up. First low, another higher low, and then you expect the price to rise back up. So if the price is rising, right, what kind of environment are we in? Are we in a risk on environment or we are in a risk off environment? It should be easy and simple. Rather now after the lesson to understand what that means. And this should be a very significant guidance for you in choosing your pair and understanding what kind of market do I want to trade and the reason why I'm trading that market. If I don't need to do anything, if I just want to be a risk on investor and be assuming risk, what kind of charts do I want to be looking at? I'll summarize it for you, right? If this pair start to move up higher for one particular reason and start to shoot up higher, which is the indication that it's already showing us what kind of environment are we in. Are we in a risk on environment or are we in a risk off environment? If we are in a risk on environment, how do we know that we are in a risk on environment? What qualifies this to make it be in a risk on environment? Someone says risk off. Robert says risk off. I've got 12 people in the class. Are we in a risk on or a risk off environment? If the card yen continues to rise, right? The card is a commodity currency, okay? Commodity currencies are risky currencies, okay? The yen is a safe haven, right? Safe haven currencies are currencies that the investors run back to if they don't want to take risk, okay? So if investors want to take risk, they will be buying a lot of card because card Canadian dollar is tied to oil, right? So if the oil starts to rise, Canadian dollar will benefit from that, right? Because Canadian in Canada, there's a lot of oil fields over there, and card is tied to a commodity. So if card start to rise against the yen, which means we want to be buying the card against the yen, right? What kind of environment are we in? Are we in a risk on environment or we are in a risk off environment? The name says risk on. Any other person? Lion says risk on. People are waking up. Jesus Christ. Alhamdulillah. Any other person? Fabian says risk on. Right. So I think Emmanuel says ride on. Read on. Robert says I will switch to risk on. So that last bit of explanation makes things a little bit clearer, right? So I expect people to ask questions if they are not clear. So risk on. So you don't have to be confused. And that's the reason why I brought up the slide to make sure that I will take a picture of this slide and send it across to you that, okay, when you're seeing hard yen rising, when you're seeing New Zealand yen rising, the Aussie yen rising, Aussie, New Zealand, hard, they are commodity currency because they are tied to some commodity. So if commodity is rising, the currency will definitely benefit from it as well, right? So if the currency is going to be benefiting from it, then you want to be tying that currency with the safe havens, with the currency that the investors won't be interested in. The investors will be interested in the commodity currency if we are in a risk on environment. The investors won't care about the safe haven, which means the safe haven are currency that the investors run to when we are not in a risk on environment. Okay. So when we start to get into a risk off environment and we are not in a risk on environment, investors will be buying a lot of sweets. They will be dumping a lot of Aussie. All right. So over here, you will be seeing the way they dump the Aussie straightforward. They run away from risk at a point in time. When you start to see the selling off of Cadian, they are running away from risk. Okay. When you start to see them buying Cadian, then they are running into. So, say for example, now this is how you're going to be able to identify it. So, we hit a support level, right? A key support level, we hit it. So there was a couple of risk on days over here. Then we got to a time whereby they need to rest a little bit. Then the sell-off will occur, right? When the sell-off occur, you know the buyers are not interested in high prices. The buyers always want to see cheap prices. When the sell-off occur, if they come back in and this sell-off did not come and take out this low, the risk on environment continues. All right. Then the retracement will come back in, risk on environment continues. Retracement come back in, risk on environment continues. Retracement will come back in, risk on environment. A real sign of risk on environment continues, where they are more than happy to assume the risk. So easily you can now start to identify the sentiment of the traders in the market. Huge risk on environment, right? Push price. So now we hit a particular reference level, which is a previous big time resistance, and the sell-off occur. You don't want to be in this market anymore at this point in time as a buyer until you see if you haven't buy anything from this low. So say for example, you haven't buy anything from this low and then you are hitting here and you are still thinking, because the price is rising, then I want to be a buyer. No, you are buying in a very, very wrong area, right? So the sell-off occur, right? Those buyers comes out of the market and then you wait to see them rounding back in because the seller can push price back down again. The risk on mode continues. They come back to retest this low and then we are rising much higher. You can see the support that is now formed, which is going to be somewhere over here. And if the trend is going to be a risk on trend, this is the last bit of support that is clear. This is the next level of support. You can see the support from this one to this one, which means this low, right? We have the higher low in this area is now rising back up higher significantly. So we are expecting that price will be able to break up high above here in a way or come back to here again and the resistance will act. Because as you can see, the first test, the second test, then we rise up higher. The first test, now the second test, potentially we can start to rise up back higher. So this all can be giving us an indication that we might be seeing a continuous risk on mode when we start to break above this area, right? So that's that on the card here. Let's look at the New Zealand here. So for the New Zealand yen, we quickly look at 4-hour chart. So the same as support with each level of support, right? Potential for us to come back to this area, maybe not. We don't really care about that. We just want to know what kind of sentiment the investors have. So if the investors are in a risk on mode, we expect to see that the New Zealand yen is rising, which already we've seen. But are we going to just expect it to rise above here? No. So what we're going to be looking for over here is to see potential sell-off, right, in this area. And then that potential sell-off, the investors who want to join a risk-on environment will be looking at this support. Number one, they will be looking at the next level of support, which is going to be that one. And looking at another third level of support. And this is a good one because it's a role reversal level where we have a previous resistance, right? Sell off, break above it, and then turn this into support. So this level here is a key level, right? Such that if price decides to fall, for us to continue to be in a risk-on environment, then we might be looking for a next buy in this area to push price back up higher, right? So that is what we are thinking of. That's what we are looking at. And then for this risk-on environment to continue, this will be the next good level for us to be looking for a buy or a sell, a buy continuation in that area. Right? So if price is coming back down to here and then the investors start to buy it back on, you can see that we have a low, we have a higher low, we have a much more higher low, and we have a continuation higher low, which can now continue to lead this price on the high level, right? So that can give that risk on buyers a continuation, all right? So you want to know whether the investors are more than happy to assume risk or whether they are not happy to assume risk. And the next level where you're going to be looking for them is going to be this area where you'll be thinking, okay, there's a huge level of support, huge level of support, huge level of support. Price come back to this horizontal and dynamic support. Probably we can then take it up from here to be a buyer. So you don't want to take on anything over here because everything, the commodities are lining up as a risk on. The stock market is lining on as a risk on. So for New Zealand, then you'll be looking at key areas to make a decision, which is going to be all this level over here. That's on New Zealand yen. So we come back to Aussie yen now. On Aussie yen, if we're going to be on a risk-on environment, if the risk-on environment is not going to be changing for any reason at all, you look at the price, you can see that we've rised up higher, right? So we come to a key significant. Some of them are leading more than the other. It's now your job to find the one that is lagging, that is not already leading, and then that's where. And if the risk-on environment is not going to change, what would then happen? We hit the resistance the first time, we hit the resistance the second time, we hit the resistance the third time, then the sell-off will now start, right? If the sell-off starts strongly, then easily you can say, something is changing. This time, everything is not lining up as a risk-on environment. I have to be careful in this market. When everything lines up as a risk-on environment, maybe that may be the good time for me to say that I want to take a trade. But at the same time, if it's going to come back to a risk-on environment, then all this level will now start to become key. This role reversal level, previous area of resistance, right, turn back into support will now start to become key for us to have a look at, right? So for the risk-on to continue, will now come back in this area of technical level, right? So that is this for the Aussie yen. So you don't really need to kill yourself because you are looking at intermarket correlation. If price doesn't come back here, it doesn't really make sense. to be looking for a buy opportunity in Kajin. Right? So we look at this, this. So if we are in a risk on environment, we are interested in the support. Okay? So the 4-hour chart is telling us the last couple of sessions, and when something is changing, you'll be able to see it faster as well. So this support over there, price come back to a buy, right? So come back to this level of support now. This is the key support that will determine whether the risk on environment continues or not in this case. Right? So they assume some risk, they buy, they form a higher low, assume some risk, they buy, they form a new higher high, then they come back to this support. So you can now start to see that this is a lower high, and in this lower high environment, is that a key reason for you to start to say that something might be happening to our risk on environment. Maybe we are actually changing because there's no strength. So you'll be able to note which currency is leading the risk on and which currency is lagging or hasn't lead. So in this case now, just because we've come down here, if price start to fall down significantly, you don't want to buy until we get here anymore. Anyway, there's a level over here as well. So this is a role reversal level over here. So you can just choose one of these currency and be using the other one to be an indicator for you to say that okay, this one is going to be the one that's leading me. All right. So say for example, you're looking at here now, price is coming down here. You can see that rejection on the wicks. And then over here, the rejection on the wicks. Then we have a doji that shows us that the continuation to sell is not strong anymore. Then because we find the first rejection, the second rejection, we'll be expecting that in the new week now, in this area where we are, there's potential for price to do what? What are you going to be looking at price to do? Are you going to be looking at price, potential for price to continue to come down or potential for price to rise? That's another key question on this. So I want to see how many people is going to get this right. If you don't get this right, we need to treat candlestick purely in a different level so that it's understandable. So with this is a 30-minute chart, 4-hour chart, right? So this is a 4-hour chart. Let me look at the 30-minute chart, say for example. So the 30-minute chart comes to it here. We form a support. Some buy comes in, and then we didn't see continuation. We come back here again. We didn't see continuation. We didn't see continuation. Now we come back here, right? We saw that buy coming in, another buy coming in, continuation. But we hit the level over here. We come back here. We saw the buy coming in. So in the next session, really and truly, if there's no gap, all things being equal, what can you expect? Do you expect that price will go up higher, or you expect that price will fall down? With what you can see in this candle representation over here. And I need to know the reason why you choose that answer. So you sit down, you're looking at a 30-minute chart, and then you're saying to yourself, okay, I'm looking at this. What do I want to be? Do I want to be a buyer or do I want to be a seller in this situation with what we've seen? And the reason why. So on the card Swiss, do you want to be a buyer or do you want to be a seller? And the reason why. Anyone? So if you're confused about this and you don't know what you want to be, then I believe you're going to be confused about so many other things as well. So the question again is on this, do you want to be a buyer or do you want to be a seller right where we are right about now? Irrespective of whatever the outcome is going to be. If you're going to be a buyer, why would you be a buyer? If you're going to be a seller, why would you be a seller? And where would your risk be? Okay, so if you're not going to answer, I'll start with you one by one. Emmanuel, right? I'm going to unmute you if you are there. I want to be a seller. It looks like a continuation.
Yeah, yes, seller.
So Titilayo said she wants to be a seller because it looks like a continuation. All right, so I'll keep your answer to one side. How about Emmanuel? And then I'll come and treat the question.
I want to be a seller.
You want to be a
I think
seller?
it's a continuation, it's a rising wedge. The bearish rising wedge.
You want to be a seller because?
Well, I think it will be a continuation, bearish rising wedge.
This looks like a wedge.
It looks like a rising wedge for a continuation, bearish.
So, say for example, are you saying?
Yeah. Yeah. Yeah, I'm looking to sell if it hits the upper level.
Oh, if it comes back to here, you're going to be looking to sell.
Yes, yes.
All right. So,
as a continuation of this bearish, initial impulsive bearish trend before the rising.
Because you saw this sell-off.
Yes, yes, yes.
Right.
And then the rising wedge.
And then you see a rising wedge, right?
Yes.
Structure is telling you you're going to sell, but you're not going to sell here. You want to sell when we hit here back.
Yes, I want to sell up. Yes, up. Yes, yes.
Say that again.
I want to sell up at the upper. If it hits the upper trend line.
At the upper trend line. Okay, so you are looking at potential to sell somewhere here.
Yes, yes.
Right, so Emmanuel is looking at potential to sell this probably here.
Yes.
Right? Okay, so that is Emmanuel. Who else has got a different opinion? Thank you so much for that, Emmanuel. I'll note that one and we'll talk back about it. So I'll look at Felicia. Felicia. I can't sense it on the Felicia. Alright, so I kind of run Felicia. Let me see. Alright, so Felicia, I'm managing to unmute her, but it fails again. Right. So I'll move on to what would you be thinking of doing where we are right now? What would you be thinking of doing? Right. So I don't know. I think let me see. I think Grace, Jalil, I want to be a seller because the sellers are resisting. We'll be looking for a buy because it's an uptrend. Okay. And someone said something, I think that was City as well. I want to be a seller. It looks like a continuation. Okay. So everybody and most people have managed to contribute. Okay. Most people have managed to contribute. And this is where the challenge is. Somebody wants to be a buyer, somebody wants to be a seller, and then obviously a lot of ideas are coming in. On a chart whereby there's a confusion in a way, right? You want to be very careful, all right? Because one key thing is this. Yeah, I know we had a sell-off. I know we had a sell-off, right? And this sell-off stops here at support. Okay? So if the sell-off stops there at support, one thing that you want to be looking at is this. This is a low, right? This right here is a very huge confirmation for a buy, right? Because this low was not only tested once, right? We hit a high level and we come back to test this, right? So which means we have a very good level over here, okay? So, and then we rise up from there, all right? And in rising up from there, forget about what happened over here. But when you start to look at it, because the same thing that happened, what happened over here, right? It's more or less like is the same thing as what happened over here. Because what happened over here gives us this rise up to here, right? So then we come back to the same level where we rise up higher, right? So now we are back in the same area and we start to rise. And as we are rising, one key thing that starts to happen is we first of all make this high, then we make a lower high, then we go ahead and make a new high, then we make a lower high, right? So I haven't make this lower high now. The only thing that will make price to continue to become a sell is if we look at it on a higher time frame. So let me add some jargon. When you look at this weekly chart, right? If I ask you, what are you going to be again? Are you going to be a buyer or are you going to be a seller looking at this weekly chart? Emmanuel, Grace, Jalil, and Titilayo.
I will be a seller.
You'll be a seller when you look at this weekly chart.
Basically, I will be looking for opportunity to buy.
Who said that? Grace.
Sati, yeah.
You'll be looking for opportunity to buy. Okay.
Yes. If tomorrow the market opens.
And what makes
even though
you
currently now you're sitting at the resistance.
Sorry?
But
So you will now be looking for opportunity to buy. What makes you want to look for opportunity to buy now?
It means that the whole of this week, the market seemed as if it has reversed. So if it's a pullback, then equally the market is sitting at the resistance. So my buying may definitely come at the break of this weekly resistance, because I can see resistance to the left side, very strong one. So buying or selling at this moment to me may actually not be immediately when the market opens. But coming down to the smaller time frame, one can be able to actually see what the market or the price action is saying at the same time. But on the overall trend, as I can see now, it was an uptrend, and these 3 weeks was a pullback. And then because I think if we take Fibonacci from the last week to the highest price when price get before it reversed, it seems as if the market want to go back up again.
Right. So this
Can
is,
I just add, what about the rejection to the upside? So those candles, all the last 1, 2, 3, 4, 5 weeks candles have been showing sign of rejection of higher prices, isn't it? So the wicks are to the top side mostly, not all of them, but last 2, 3 weeks have been rejecting higher prices. Although it looks like I would want to be a buyer, but I'll consider the fact that, it's sort of showing rejection of higher prices.
So let's look at monthly charts. So looking at this monthly chart now, has any opinion changed?
Yeah, I still think it's rejecting higher prices. That so that sell-off has now seen a pullback, and then it might continue downwards, continuation downwards because of that rejection. Like the last month's candle, I don't know if that's a doji. Yeah, that one shows that the pullback is actually weakening now as well, such that maybe then we should start to see a continuation downwards. Although that weekly does look like it's an up, like you'll be buying, but that rejection up there is more apparent here now. Will tell us that we should be in a sell. That's what I think. I don't know, but that's why.
Well, I think basically to me, based on that monthly rejection, which the candle end up closing bullish, I will still be bullish on this one, because I have actually taken candles like this on smaller time frame or 1 hour, 4 hours, thinking that is a reversal, the market go higher. So using that as part of lesson that the candle of last month does not close bearish,
Right.
though it was been rejected, I will still be looking for opportunity to buy, because I have learned a lot about this candle closing to the other side.
Right.
Yeah.
Any other contrary or the same opinion or option? Or all right. So what we can see, let's start to look at what we can see. Okay. We can see that there's a significant sell-off, isn't it? And this significant sell-off, it is not any difficult and clearer to see that when this buy started, right, we find ourselves in a position whereby we make a new monthly high over here, right? We make another new monthly high over here, right? We make another new monthly high over here, okay? Whether that change anybody's thought or about anything or not, and then you can see that we make a what? After this low that we see at the back of this sell-off, okay? What we can see is we make a new higher low over here. That month we make a new higher low over there, and we make a new higher low over here. In a situation like this, this is 3 months of what? What kind of trend is this?
Uptrend.
Right. So we have a 3 clear months of uptrend. We keep that. Okay. Although we start to see a significant sell-off towards the last month, but there's still an uptrend. Okay. So if there's an uptrend, for us to be a seller, what will change? For us to be a seller now, right? We've seen clearly there's an uptrend, right? For us to be a seller, what will change?
I think we need to see the low broken, the low of the last month reached. So if we've reached that low, at least, you know, that is a bit of that's an indication that maybe we're coming lower. But I would wait to see that one of those lows broken.
So which means in the meantime, what are we for now?
Bullish then.
We're biased.
So for now we are buyers, which means that's a backup Shike's opinion. All right. So now when we now look at it on weekly, we've seen a sense of a trend. This last week, what we did that is significant is this. We want to be a seller because the month closed significantly bearish, fair enough. But the trend hasn't changed, isn't it? So there's no way we are going to be a seller when the trend has not changed. If the trend changed now, if the trend has changed now, then we know that, okay, things are now looking positive to be a seller. When we now look at this week, we traded back above the low of this week, and then we traded back above the low of the previous week. We in fact traded, okay, we didn't test this one, we traded back above the low of all this week, all right? So, and we closed the week in a bullish manner, which means we overcome a lot of obstacles to even find ourselves in this area, right? So currently, there is every single thing that can make the next week potentially bullish. I'm not saying maybe overall, sooner or later, maybe the huge sell-off will now not come in and turn this around, but we have to work with what we have. We can't work with just what we think. What we think can be very, very confusing if we don't look at things in a much more technical manner. So this has looked bullish to us. We know if we're going to be a seller, we need to see a break of a particular low already. Then our bias still remain bullish on this weekly chart. We go back to a daily chart. So going to a daily chart now, we've seen the one particular high over here, we've seen a low over here, we've seen another high over here, we've seen a low over here. The key low that needs to be broken before we can actually think of being a seller is there already. So the key low that needs to be broken before we can actually think of being a seller would have been this low. When this low is broken, then we are going to be a continuous seller after this low is broken. But what is happening at the high is what is now key to us. So we know this high. The next high that we will be thinking about will be some kind of high that will come at the back of this trend line. So when we look at the way the daily close, how did we close? Do we close bullish or we close bear? I mean, sorry. What kind of, is this a bullish close or is this a bearish close on this daily chart? Not the last candle, but the candle before, this candle.
That's clearly is a bullish candle, but the one of this week, it closed bearish, doji or whatsoever.
Right, so why, what happened? It's a day. What happened on this day?
There was serious fight between the bull and the bear.
Apart from that,
Ups and down movement.
what was going on fundamentally? So, what happened on that day? What happened on this day, on Friday? Because that's the day that we're talking about. What can you see here?
Bank holiday.
So if there's a bank holiday, the whole United States banks are not trading. And which session have more volume? Is it the Asian session that have more volume, or the Europe session, or the US session?
US session.
Right, so in between the US and the Europe session, where both of them overlap, that's where most volume are. So when one of the significant parts of the trading association are not in the market, you are bound to see a day like, what are we looking at? You are about to see a day like this because United States and Canada, they are more or less like in the same region anyway. So we are looking at CAD against the Swiss. So we will be looking at this day where everybody trades and everybody shows us that they want to be a seller. They want to be a buyer because they come in to buy the support. On this day, it's completely irrelevant to us in a way because there's no the same amount of volume in the market as it should be, such that what happens on Monday now, going into the new week, will now start to become significant for us. And that's the reason why, if we start to investigate what happened on a 4-hour candle, we will see that despite the fact that there's a bank holiday, it takes 4 hours, which is 8-hour session, right? For a whole session to be made. So this is the first 4 hour, this is the second 4 hour, this is the whole of the US session, right? When the price come back to this level of support, find rejection, the buyers come in. They are the last people that comes in. Price tests back that area again, they don't even want price to reach lower. They come in quickly to buy, all right? Which means when we are going into the new session, we can't neglect that the previous day has already closed bullish, right? That has negates in one way or the other this potential sell-off, right? I'm not saying this is not a wedge, but let's be careful when we are looking at things at the same time as well. It might look so confusing and then confuse us based on what we know. The one key thing about this wedge is this. Look at it on a 15-minute chart and we see where the so this is a wedge that is forming a low, right? And this low is giving us what? A potential higher low. We rise up to that wedge again, it's forming a low. This low is still higher than that, right? There's potential for us to be a buyer, right? Such that where Emmanuel is looking for a sell setup, it's a key area as well. There's no doubt about it. But currently where we are more than a buyer with everything that's happened on the weekly. And then when we get over here, if you have 3 positions in the market, you know that, okay, most probably, let me take out 1 or 2 out in a way. And then if I've taken 2 out, I'll leave the last one at break even to see whether we're going to break here, because we have every potential to possibly break here come to all this area and potentially continue back up if we are in a risk-on environment. We have that potential, right? So that fundamental thought can be backing our view, okay? That fundamental thought can be backing our view. And one key thing about this is this: when we sell off impulsively, right, we come back again to buy impulsively, which you might not be able to see on the other time frame, except when you build, when you come to a lower time frame, such that this is now looking like a what? Emmanuel, the 15-minute chart is now proving that this is looking like a what? A correction. Am I lying? And we have an impulsive break as well, come back to this area. So there's a lot of decision to be made around there. A lot of people, we want to make decision probably after we break this trend line, right? A lot of people will want to make decision over there probably after we break this trend line. Might be the key area where they will be thinking they want to make a decision. An impulsive trader, which means an aggressive trader, when they make a decision, they will make this decision right over here, buy here, and the stop will be just below here. Right? So that is being aggressive in nature. You buy here, the stop remains just below here, such that, and this is where the stop is going to be. That is being aggressive. Right? So if you're an aggressive trader, you are buying because you come back to this level of support, you've seen rejection, there's a huge week there that if price starts to move back up again, there's a potential opportunity for price to go up much more higher. The stop is just down there. If price turn back and hit that stop, it's just a small stop anyway. But the potential for that is they want to have this about 4 to 5 pip stops, say for example, right? And then they want to be targeting potential reasons for price to go up higher from here and continue to go up higher. It's that is still the stop. If they have 2 positions, they would have taken some out. They know that there's a decision to be made at this trend line, and then they are looking for potential reason for price to come up higher. All right. So where is your stop will determine where you want to enter the position. Someone who wants to just take a 4 pip stop, say for example, will be more than happy to say that it won't hurt if I take my position in that particular area. Let's take this up. All right. And there is a lot of potential for this to go up higher. If it goes up higher, at least this will be the next place for the risk. Right? Because we've have a bounce off of this area of support. I mean, we broke a previous resistance. The usual thought is when price comes back to it, it comes to a support, and that support can then lead price come back into other area of resistance. So take note. What happened before? I always look at that, and I've seen that happening one too many times in simple concept of understanding that, okay, if it's an area of resistance, if it's going to resist price, we shouldn't be able to break it. But once we break it, right, then this area now becomes support. If price comes back there, we expect it to be a support. If I see any tiny little inclination of impulsive move, probably on those 15-minute charts, then straightforward, I want to be a buyer. You know, I want to be a buyer because I know that price has broken a previous area of resistance, come back to it, turn it into a support, and that support should be able to support price and push price back up higher. I know there's a small level over here, that's not a problem. But like I said, low risk and then high probability push up higher will be one trade that I will be considering. Having look at things from a longer time point of view, from monthly, and this trade is going to be a very challenging trade in a way, because you shouldn't be looking for maximum opportunity more than up to here. At least by the time we reach here now, another position should have come out of it and leave the third position at break even in case that monthly doji will now act. But this trade has a potential to get up to here, right? And when it gets up to here, if you have 3 positions in the market, right, the moment you break here, you know you're coming down up to here. Once you get here, most of the position would have come out of the market with the exception of one. Should the case things are now going to go and make a new higher high on the monthly time frame. So it's just a little dynamics, but it's important to understand that dynamics and to be able to follow the dynamics and tally it with other things that are important, like understanding your risk on and risk off mode at the same time as well. So looking at this day chart, New Zealand Swiss. All right. If we are in a risk on mode, then we should continue to be able to push up higher. Is the chart setting up to look like as if things are going to push up higher? Yes, it is looking like it. Are we in a key area? Of course, we are in a key area. So, and when all this key area is broken, it continues to reaffirm the fact that the risk of mode, the risk on mode just continues. So if the investors are more than happy to take on risk, right, then we should be able to see that we are able to break this area. And then if they are taking on risk, then price should continue to rise up higher anyway. These are the potential levels to be watching out for. So these are the currencies that are likely going to be rising. All of them are still showing tendency that they may rise in a risk-on environment, and then that will put you in a very key perspective to be able to monitor what is going on. So when we look at this on a monthly, we have a huge wicks that can be filled, right? And then obviously we will encounter a bit of resistance, which we've seen because of this roll, reversal, potential support now turning back into resistance. And then price is looking like I said it's going to push up higher. Let's look at what weekly says to us. So the weekly, we hit that level, we come back into area of consolidation, and price is breaking out of that consolidation. We sat on a proper support level over here, and the daily shows us that as well. So if the New Zealand Swiss is going to rise, it will be rising as a result of potential risk. It will be rising as a result of potential risk on mode, right? We form a support, we have a higher rounding bottom, which can lead to pushing price up higher. We're at a key level that decision needs to be made. Let's look at the lower time frame to see what is actually happening. So in this one, what we are saying is the daily shows us we want to rise, but the 4 hours now is telling us that we've hit that resistance and the sell-off is occurring. Although we sell off into here and then we have this rejection, but it doesn't still mean that price can go further down. It's now up to us to go and look for levels to say that, okay, maybe this level will become crucial if price continues to fall all the way down to there. Right? So previous level of support, price breaks it, turn into a roll reversal, support turn to resistance, sell off, and then price continue all the way higher. And then if we come back here again, maybe we can see that support buy to continue to follow our risk on bias. So that would have been the level that we are looking for on the Aussie Swiss. Anyway, so let's look at the see. Yeah, and then I'll copy most of this chart and then send it into the charts group for us to see how things are developed. So for this Aussie Swiss, we have a bit of a challenging month, but things are still looking a little bit positive. The only pair that the monthly looks so bearish that might be sending an indication onto the market is that Josari Cat Swiss. Obviously, until we break that area, yeah, the Cat Swiss. The monthly looks so bearish, right? And for us to follow this bearish confirmation that we are seeing on the monthly, if price is going to actually go bearish, we need to see the break of this area. So there's no need to be mounting unnecessary bearish pressure at heart until that key level is broken. And where is the key level? When price comes back down and break this area, that's when it has turned completely bearish. But for now, we are trading in a falling sideways range. So look at that sell off, sell off, sell off, sell off. And then instead of us to actually break it on the second time, right? We find it as a support. Price can come back there again. When price is coming back there again, it's going to be looking at a triple bottom. And more traders are going to be looking for this area as a buy. This is the last key essential area to look for, right? So if the risk on environment is going to turn into risk off mode, then when we start to trade below here, the early indication of that. So now, fundamentally, you are raising up your trade. Fundamentally, you can see that this is the lowest part of the chart for now. And once this place crack, right, we'll be looking at whether all the stock market too will be cracking to the low side. We'll be looking at whether every other thing will be cracking to the low side. And if all the things that we've discussed, which is the stock market rallying, which is the bond yield rallying, which is the commodities rallying, if everything starts to sell off, right, when you start to see a break of this area, some traders, they won't trade anything. They will be betting on potential risk off, right? And they will look for a chart that will give them that first indication of potential risk off. Okay, so it's a skill on its own. When you now know that chart that will give you that indication of that potential risk off, they will begin their trading risk off direction in that manner. Does it make a little bit of sense at all? So most of the time, it's not about just chasing. It's about understanding some of these fundamentals in a manner whereby you can then form a longer term projection. So when you have this key understanding, you'll be looking at your trade and be like, okay, this can go a lot more further down, right? Because I have so many things that is backing up my bias, not just my own thoughts alone, but the thought of the fact that the market is now in a risk-off environment. Not just only that, I've seen my key charts that I'm watching to begin that risk-off environment start breaking. And the funniest thing is this: when you now have everything closed up like this, right? One thing that you're going to be looking at as a trader is, okay, this particular chart has breached the risk of the risk on mode. Now we are falling into a risk off. Which other charts out of my 36 charts that I'm looking at is going to be the one that will follow? You get where I'm coming from? So maybe you miss the CAD Swiss if it's the first indication. You miss that, then you look at the New Zealand Swiss. If we are actually going to go into risk off mode, everything will start falling apart. The mood is going to change completely, and then you'll be able to see when the modes change. So this is a high-level fundamental trading sense of looking at things, but I believe it's very good for you to understand it and for you to be able to take advantage of it. So when we look at this one now, we are reaching a key level. So when you talk, you'll be able to talk fundamentally. You're not just going to be talking technically, you know. And then when your technical aligns with your fundamentals, and then you now put on a position, because technical and fundamentals are working together in alignment, that position tends to have two key backup to make the trades go in the right direction, and then you can have all these 300 pips and 400 pips trade. I think the NFP was the NFP was moved to Thursday for that particular. Yeah, the NFP was moved to Thursday because of that bank holiday. Oh, was that? I didn't even know what happened on that Thursday. Did I trade? Right. So we are looking at the Aussie Swiss as our last chart for this session. Okay, and in this situation on the higher time frame, we are finding ourselves in a position whereby we break the support, we're coming back to it. Potentially, it can turn into a resistance. It's a huge break. At the same time as well, all the risk on mode is eating here. The moment we were able to break well above here, the risk on mode continues. Let's look at this. So back to this level. Right. The huge trend on the weekly needs to be breached up to above all this area. And as you can see, 1, 2, 3, or say even 1, 1, 2, 3, 4. There can be a potential reasons for price to break above already. That has happened one too many times in history, you know, from the area where we are coming from, because we're coming from the lowest point. Let's see. That's a huge, massive level of supply and demand zone. And we may not have traded this level before on this broker, but notwithstanding, when you look at all these psychological levels of previous area of low, when price gets there, we move up significantly, irrespective of whatever the case may be. at low again, price gets there, we move up significantly, you know. This is the only low when price gets there, we were not able to move up significantly. But in this low where we haven't seen it before, let me see whether Saxo Bank will offer me a different quote. So there's no much of an history. All right, so let's just work with what we have, which is that. So if the risk on mode is going to continue and we're going to see explosive mode, also Swiss is another key indicator for us to understand the risk on mode environments where the buy will continue to push up much higher. And then obviously in this area now, we can expect a little bit of a sell-off which may occur. And if that sell-off forms a higher low, and then we come back to break this, then risk on mode continues. It's just a bias or an idea, right? So in this case now, what are we seeing on the weekly? The weekly chart has given us this bullish end to this move, and then obviously the sellers cannot really make a decision in this area. Sell off occur, then we start to see buyers coming into the market. We can see clearly that that last week low, we make a new higher low, we make a new higher low, and then we continue to make a new higher low. That in definition of trend is telling us that we are trending higher, right? From the low side, but are we making a higher high? All right, so in this over here, if we start with this one, although this one gives us a higher high, this one gives us a lower high, that gives us a lower high, that gives us a lower high. So this in itself is a sign of we are in a consolidation, all right? Because the new highs are not being seen. So if we go back to the daily chart now, also saying sell off, right? There's a reason why this low is higher than that low, right? If the trend wants to continue to go down, right, obviously we should be making a new low. But because we haven't seen that, we just know that this is a cautious consolidation environment. So we need to time this consolidation and see what it's telling us by looking at here, okay, and knowing fully well that the price is not going to be making anything significant in this triangle, right? This will be the high and the low until we break out of here now. That's when we can say that, okay, things is going to be looking positively to the upside, or when we break down below here is when we're going to be looking at things. It's going to be looking positively to the downside. So there's no much of potential on this one than to see that breach. Okay, breach. So a lot of traders are going to be looking at this instead of them to be committing anything in this. Oh, we should look at the Aussie card as well. Instead of them to be committing anything onto this, they will actually want to see potential break. Right? That potential breakthrough is a leading indicator. If we break up higher, so it's not just about trading. It's about looking at key indicators to say that, okay, if we break up higher, then we can start to look for that potential, right? If we don't see that break up higher, then maybe it will be this break down lower. So when you know your peers like this and say that, okay, these are my risk on peers, what I'm watching for is the breakout. When that price breaks out, that's an indicator for you, and you're using price as a technical indicator. in a fundamental perspective way of looking at the market as well. So that is what is key for us in this Aussie Swiss. The last one, but not the least, will now be the Aussie card. Right? So, and all these charts can offer a low risk opportunity when you know that these pairs are the pairs I'm looking for a risk on buyers. Okay, so this is our Aussie. So some traders just want to look at the chart every 4 hours, right? And then make a decision. So on this Aussie card, when we look at it on a monthly, one key thing that we realize is this is offering continuous bullish continuation. We trade a little bit well high above the reversal. We are pushing up higher to key levels as well, right? And some of the key levels of potential supplies and demand will be those ones over here. So that high and that sell off, so potentially price might still be looking to push up higher into all these zone on Aussie card. Key thing for us to see is we have a lot of resistance in this area that needs to be broken before we get to that area. So this is what we're actually looking for. So that level, we might be looking for reaction. This level area over here, we have a bit of a gap there, and that gap, if it fills, which is currently what we are trying to do. That gaps area fills, then we can potentially find a reason to trade up higher to this level, and that's what it's looking to do, about 170 pips, still in that vicinity. But overall, what we want to use this one to time is time a continuous risk on mode or a risk off mode as well. So looking at the daily chart, daily chart is showing us we've hit a level of resistance, that's sell off right there, and instead of us to see a continuation of the sell off, the daily actually closed positive. All right, so we didn't see confirmation of the sell off, and this area has been hit so many times such that the time that we see confirmation of a sell-off, the proper continuation doesn't come in. We test it again this time around. We didn't see proper confirmation of a sell-off. If there's no proper confirmation of a sell-off, price can then rise again. So this is still looking positive on the daytime perspective. And on the 4-hourly, we are sitting on a support that can help price to rise back up even after the sell-off. So this is just a chart to be careful of. Things can turn around in any direction, but it will be good to have them and watch out for what their potential possibilities are. What we're going to be looking for on this chart is going to be the regional higher. So I'll be able to paste some of these charts. So potential break of that can lead to potential continuation of that. Over here now, the price is not actually going on like it's going to move down, but if it does, this is what we're going to be looking for. So I am long Aussie card. I'm still looking for more buying opportunities to come in Aussie card. I can see some areas, like all these areas, potential support. Price breaking down to all these areas can be an area of support where price can continue to go back to buyer, but yeah, it's very high over here now, but obviously I'm still looking at this for further continuation to the upside, the Aussie card. After the last huge impulsive move, all this can be a massive correction that is looking for that continued breakup. Let's see. We might be hitting an exhaustive level as well, which is key. You can see that price as, even if this is 0 to 1, 1 to 2, 2 to 3, 3 to potential 4, maybe 4 to 5. So you might be getting exhausted now and price wants to sell back down in terms of nature, but the areas of support are key areas to watch out for. That kind of concludes the class for me today. The only thing that I need to do is to send some of these charts to understand the risk on charts and the risk of charts to the charts group, and then you can then know all the necessary pairs to look out for. So that's one. Also Swiss, and then we can be able to follow up on understanding whether the market is in a risk on mode or whether the market is in a risk of mode at the same time as well. So okay, I think yeah, and that is there's any question or if there's anything ask, don't hesitate to ask. In the meantime, I wanted to say thank you so much for being part of the class today. I'm sorry about the little bit of delay. I was feeling a little bit poorly, but yeah, overall, I'm glad we were able to do it again as usual. And hopefully continue or so. So those are your risk on currency to looking at to understand investors or traders' sentiment. If they are going up or down, they will be telling you whether the traders are happy to take on risk or whether the traders are unhappy to take on risk. That's how we do it. Just something to add to your trading house now. A lot of people don't really talk about fundamentals, but fundamentals is at the same time important. When you can align the fundamentals together with the technical um, point of view, then it will make it a lot more easier for you to build a robust trading system. You'll actually be able to see that, oh, okay, this is an area of continuation, this is an area of reversal. All right, and those are the currencies. I hope we've had about 1, 2, 3, 4, 5, 6, 7, 8 currencies. Yeah, those are 8 currencies to look at in terms of the commodities. 4 commodities to look at. Um, and then in terms of the yield, you're looking at the US yield, you're looking at the German yield, Canadian, New Zealand, Japan, Great Britain, Australian, and Italian yield. Right? So if you need all that, also you can get in touch with me in the chat and let me know. Anyway, guys, thank you so much for being part of this class today. And I'm gonna be calling it day now. I hope you enjoy it. However how boring it sounds, I hope it helps you going forward. No problems, Robert, and have a very lovely day. You're welcome. So adding that to your correlation that you had last week and understanding the intermarket correlation today on a risk on mode, you'll be able to say to yourself that, okay, if I'm going into the market, I can take all these pairs and even have a little position in all of them, take advantage of all those pairs together with your correlation that you learned last week at the same time as well. And then obviously you'll be able to we are working towards building a portfolio. You'll be able to build a portfolio and be able to understand when things are changing and know how to understand weighting of those portfolio and stuff like that. But yeah, there are more advanced things to talk about in the investing world. The problem with most people is they want to be an investor, but they find themselves in a speculation environment. So there's a difference between the two. If you want to be an investor, there's a way you have to be looking at the market. An investor is for a long time. If you're going to be a speculator, then it is this that we are doing. No problems. Enjoy the rest of the day too. So end it here for now. I have a little bit of recording.
Yeah, before we go, Mr. Bola, thank you so much.
No problems. Go on.
Any motivation for the week?
Well, for now, the one thing that I'm going to say to everyone is this. You have to understand that the way that you think, right, in terms of your mindset, goes a very long way with what you are seeing in your life, right? Okay, so a lot of people might be having challenges in the foreign exchange market, or in the market, but you should be grateful for this opportunity, even if you haven't get the answer of it, right? But be grateful for the opportunity. But the only way you can be grateful for an opportunity is for you to have some kind of feelings towards that and being grateful. And what I mean by that is this. sometimes it's hard for us to understand how to actually bring the reality of what we want into manifestations. So say for example, the reality of what we want is to be a profitable trader, you know, to go into the market and know what to do. And that's the reason why we are here, to continue to train, to continue to understand what the market is and how to be using all those things that is hidden that we won't be able to understand in one go. But over a long period of talking about it with someone that's experienced, then it will becoming clear. But the one thing is this: you have to be grateful in the sense that you have to look at things that's ever happened to you in life before, right? Things that you've managed to achieve before, right? And the kind of feelings that you have at the back of those things. Say, for example, anybody that's managed to build a house before, maybe that's even on a high hierarchy, you know, but with me, I'll look at, I've managed to build a house, maybe because you buy a car, maybe you go through a lot in life to actually buy a car. And it can even be someone that is living with their parents, and the first time they actually move out of living with their parents and rent their own place, they now feel a sense of freedom and understand that, wow, I'm the one who actually do this, you know. And the way that you feel at a point in time when you've managed to achieve that, or someone that gave birth to a child, you know, and the way that you feel and the gratitude that comes at the back of it is the same kind of gratitude that you need to put at the back of your profession. That, okay, if this week was not profitable, which you shouldn't really be thinking about, you have to find a reason to put yourself in a mode of profitability that, okay, there's a process that's involved, right? Which you always have to follow and understand. And the process involves risk management, and understanding risk management is very key. And to take things slow rather than taking things fast, because you want to consider yourself and say that if I'm going to be in this field for 30 to 40 years, between 20, 30, and 40 years, if I look back at when I started, have I really been so hard on myself? So something that will benefit me for the next 20, 30, or 40 years of my life, right? Have I now taking it in a way whereby just because I'm looking for that success now, right? And I'm not looking at what is going to happen in the next 20, 30 years, have I now been so hard on myself and I didn't learn it the right way in which I need to learn? I know education can be very, very expensive, you know, but sometimes you will just find someone who think about other people as well, who know that there might be people in a manner that are struggling, especially in a profession like this. This being a trader can be more challenging than being a doctor, because of all the emotions and the psychological aspect of it that you have to put into consideration, especially when things goes the other way, you know, and you always want things to go in the right way. But how to balance that starts with gratitude, you know, starts with you having a feel at the back of what you are doing that, yeah, today I'm going to be a profitable trader, irrespective of wherever it's going to take. Whatever it's going to take is me feeling good inside myself that I'm able to come onto this field all the time. I'm able to come so energetically, right? If I'm tired, I'm not going to get involved. Or even if I get involved, I'm not just going to trade. I just want to see whether the areas that I mark up on the chart have hit. And then I think the most key thing at the same time is limiting the time you spend on the screen can help as well. You know, looking at things from a 4-hour point of view, it's not about being the first person to get into a position. You know, if something is going to trend, which is what you are looking for, say for example, if the market is going to trend, right? So when we look at this, so we have this sell-off, right? This is not a trending down market, all right? The gold. And gold can be very, very challenging for people, because if this is a trending down market, right, what you will be seeing is you might be looking at, one second. So it again. Right. So from here to say potentially here to this sell-off that we have over here to this, right? So this is not actually trending down, but if you're looking at a 4-hour perspective rather than the short-term perspective as well, it will really help to limit when you want to enter the trades. So 1 second. So a lot of people comes to the market, they don't look at longer term, they just look at short term, and there's a challenge in that. So if I take this off, when you're looking at this chart, what you're going to be seeing on this 4-hour, which is normally what you're supposed to be seeing, is for you to see this. Potentially, maybe where prices currently. All right? So these are your range, okay? If you are taking a buy opportunity over here, right, then the potential hit over there, which means this was going to be the last buy, all right? Which means if you're not looking at it from that point of view, if you zoom to 1 hour, and you, instead of you to see these two areas here and here, then on 1 hour now, you'll start to see here. Look at this area where we've seen, okay? You start to see there, you start to see somewhere here, right? And then you start to see here. So now you are going to be confused because instead of you to say that, okay, I'm only going to look at 2 areas to enter my buy trade, that area over there, right? Which would have been the best area should in case price move all the way that it moves. This is impulse, correction, continuation done. Now, what we are seeing is impulsive move down. And this impulsive move down, I'm very sure that we will still have another move down at the back of this impulsive move down because it's significant because we break down this area. So me personally, I will want to say to myself, let me look at 78.6 at this point in time. That's me being more technical than any other person. So I'll be looking at my 78.6. That's what gold does, which is somewhere around there, which is a good area as well. Another area for role reversal because the move has already happened. So I'll be looking at all this area for the next shot if I am going to take on gold. But obviously, the lessons that we were talking about today was something different. And then I'll be looking for an opportunity for that significant reason to find a sell-off in that area again and come down to here. So if I want to be a buyer, I'm looking at this 4-hour chart and saying to myself, most probably I'll be looking for another buy opportunity in gold in this area. And that's the way that I'm going to line it up, all right? So I would have reduced a lot of energy of what is going to happen over here, what is going to happen over here, what is going to happen over here, what is going to happen in all this middle part, right? So I'm limited to this low over here, right? And then this high over here will be my level playing field. So if price is not in that area, then most probably I'm not going to be in the market. I wouldn't really care myself about what happens so much in the middle. But now, because of this significant sell-off, which is huge, psychological level sell-off, right? I'll be looking for another opportunity for the sell-off in this area, which means this sell-off, I want to take advantage of it at a much more higher level if price fails. But I mean, but the trend hasn't really changed. So what I'm trying to say in essence is this: don't be hard on yourself. Look at the higher time frame as well, right? The higher time frame will limit the time that you spend on the screen, and it will give you some key levels to make sure that the trade can at least go in a much more profitable manner. Look at this. This is good. That touch over there, look at this area, that touch over there, price comes back to it as well. So in one way or the other, we might have a failure for price to quickly want to rise back up. We might have a failure of that rise, and then this sell-off will still take advantage of the situation. That is good, but look at things from a higher point of view, higher time frame point of view, 4 hours chart point of view, and be grateful for where you are currently. At least we are still able to wake up. We are still able to meet up again. You know, the millions is not going to come in one day trading. All right. But consistency in that result and limiting how much trade you have to attain that result is key. Because at the end of the day, when you go on all these social media platforms, a lot of people, what they are posting on there as something that is going to be damaging to your thought process, right? And if you've been trading long enough, you will realize that those things are damaging to your thought process, because there's nothing that you see on there that will be posted in terms of the way people post results and the way that they take a trade, that you'll be able to understand what is actually the risk management at the back of this. So if you try to adopt things in that manner, you won't have a longer term success in your trading, because you will continuously be going against the risk that you should have set. All right. So having said that, understanding that being grateful is very, very key. It's not a lot of people that will be able to sit down in the front of computer and be able to generate an income from it, right? And in a legitimate form as well, using their brain. You get where I'm coming from? So if you are learning the skills and you are developing the skills, be grateful for it, because you are already grateful for it manifesting positively rather than feeling negative about, what have I done again? Stop being hard on yourself. I'm so dumb. I don't even have sense. I should have seen this. I should have seen that. It's not easy to see everything at the same time as well. It's not a business that you want to get involved in and you think in 7 months, in 1 year, in 2 years, you will become the best of the best. No. Sometimes you will still have that bit of you that needs changing. And the more you realize that, okay, this again, it will be showing up repeatedly that this is what I need to change. You will make the mistake again, it will show up again, this is what I need to change. Then be grateful that at least I'm seeing clearly the things that need to be changed. Now I have to work myself towards how best can I achieve change in it. You get where I'm coming from? Because it's all about something that needs to be changed about ourselves, something that needs to be changed about the way that we see things. A lot of us want to see things manifested like just like that, like a magic. But a lot of us has forgotten that from the day that we were born, we did not just manifest to become a trader from that day one. It takes us a little bit of time to take a walk. It takes us a little bit of time to start growing. It takes us a little bit of time to even get to understand what a computer is. Unlike the kids that are born now, times it takes us a little bit of time to even be able to understand the knowledge that we are putting into this. Some things might sound so strange. Some things we just don't understand at all. There's just so much to deal with. You know, this is a profession on a high level on its own. So you have to try as much as possible to understand that if you are a doctor and they bring a dying patient to your table, in as much as you want to save that patient, you are at the same time scared in a way that what if this patient dies? But you do everything within your means to be able to save that patient, you know, to make sure that that patient lives. But can you save all patients? Some people, their time is just naturally up. We can't save all patients, you know. So, but the more that you are able to do positively each and every time, and you see that everything that I did in this trade, and it becomes positive, I make sure that I put all the things that needs to be right in the right manner and it becomes positive. Those are your powerful trades. The ones that you quickly do, like, you should work out and it works out, you can find yourself in a position whereby you will continue to follow that kind of a system to generate a longer term profit. So it's all about the longer term. It's all about the longer term profit. The market is not going anywhere. If you go to any market in your area, wherever you are, you'll see that the market is always open. The same thing applies to the financial market as well. It's always there. So don't let us be hard on ourselves. Let us look at the higher time frame. Let us be grateful for the knowledge that we've got in it, right? As much as it's not enough, you are better than someone who doesn't have any knowledge at all. You know, it's all about the up and down bias, but what part of the bias do you want to be? You know, and if you can find a very good level of bias to be in, then it will be very, very profitable for you. And everything starts with understanding where are the buyers coming in from. The buyers are here, right? They are here. If I can manage to get them here again, then it's good for me. All right. So you have to see where they are. Where are the buyers again? The buyers are here. If the price manages to come back to this area, if I've known, I will wait for gold in this area and possibly have a good buy up. All right. So where are the sellers now? The sellers are here, right? So you know where they are. The sellers were here before as well. You know, so you are looking at them and you are looking for one key thing that will qualify the trade that you enter in that area to be a rejection that will not be a sell-off trade. So I think, yeah, those will be my motivational thoughts for today. Understand the psychology that you need to have at the back of it in terms of risk management, and at the same time be grateful. Just be grateful and put yourself in that mode of you're already a successful trader, irrespective of whatever challenges that you may be feeling, and understand the feelings that comes with how are you going to feel when you become a successful trader. That is the mode you always want to be in, rather than feeling like I say, I don't really know what I'm going to be trading today, or I'm going to trade this and this and that. That is a doubtful feeling. But be grateful and just accept that you are already on the path already. And sooner or later, matter of time, what you're going to be recording will be a huge success. And be careful in terms of risk management. Once you can manage that, don't worry about $100,000 a day, because by the time $100,000 a day will come, you'll be surprised. It will be coming like a joke. Worry about the skills. You know, I have a mentor, and my mentor will tell me that if you can consistently be able to show that I can make 2% every single month, consistently, you go through the track record. So if you have a track record that says 2% every single month, 2% every single month, it might not be sufficient for your lifestyle that you want to live, but someone will back you up and be like, I know that I can give you £1,000,000 or £1,000,000 to trade, or 10,000 or 50,000 pounds to trade, in as much as I'm not going to lose my capital, but I'll be able to get this amount. Then you are more or less like the bond market, right? Because all investors that are invested in the bond market, they know that they're not going to lose at the end of the day. The return might not be much, but that return is such a peace of mind for them that will give them the opportunity to say to themselves that I'm more than happy for my money to be secure over here, because I know I'm not going to lose the capital. The principal is going to remain there, and I'm going to generate a little bit of a return. Out of that return is where your own commission is going to come in through as well. But if you're going to think you're going to wake up one day and you don't have $1,000,000 and you don't have any other business that's making $1,000,000, right? And that $1,000,000 is suddenly going to come from the way that you trade, then you are doing yourself a disservice. Think about sooner or later, when I'm able to prove myself to the world that I can find those areas where I'm going to pull the trigger. And when I pull the trigger over there, my results will accumulate in the sense that it's even going to be giving me 2% every month. Someone will look at that and be like, this is a positive result. They are more than happy to let you do your thing with this amount of money, you know, and that's where your own massive gain is going to come in, because you know some days whereby you can do 5% even, you know, based on what the market presents, but you are not looking for more to kill yourself. When you do 5% and they take whatever they want, you make more. That's your own profit at the back of having this knowledge. And that's the way that it goes. Don't limit your thought to, when is it going to happen? Limit your thought to, how am I going to do it to become much more professional in what I do? And then that result will be something that someone will eventually see and be like, there's a consistency in what you do, which means you become a professional. You will always do it in that way. Nothing is going to change about it. And that is the way to go. I hope that helps. All right. And have a blessed weekend. And we catch up much later on. Thank you, everyone. I'll call it a day for now. Okay. And Jalil, let's find a way to talk and see what you're talking about and do it again. Yeah, tonight, most probably. We'll play the charts there. All right, no problems. I will. This is it for us. Sorry. Have a lovely day, everyone. Thank you. Bye for now.